Hey, hello everyone. This is Trader Shivay. So in the last video, we have talked about auction market theory rules, and we have talked about how you can find the value area in market profile. We have learned all the theories like what is initiative buyers, what is responsive buyers and sellers. Okay, so all those things we have done. Now there is one more tool which is very important, which is called VWAP. Okay, so in this lecture, we are going to cover what is VWAP, why to use VWAP, how to use VWAP, and now we will combine VWAP with auction market theory, and then we will combine everything. So what is that? Basically, we will combine VWAP with market profile and order flow, and also do some multi-time frame examples. So first of all, friends, this is very basic. Most of you guys know that what is VWAP, but let me just tell you. So VWAP is called volume weighted average price. Okay. Yeah, so how you calculate the VWAP? So basically what you do for each candle, you multiply the average price. And what is that average price? Price is HLC by 3. So multiply by volume, do sum of all these, and then simply divide it by the sum of volume of all the previous candles. So that is how you calculate VWAP. Now guys, let me show you how you can apply VWAP and bands in Go charting. To do that, what you have to do, you have to go to FX study, go to order flow and apply simply VWAP. Okay. Now you can see you have got the VWAP line. Okay. Now let me go to the settings. So for that, there is this button. Click on this. There will be a gear. Now, what you have to do, the source, as we have just seen, HLC by 3, but there are many different sources you can choose. And then what you have to do is switch on this deviation on and click on apply. So here I have taken 1, 2, 3 as deviation bands. You can also do anchor VWAP. So if you switch this on and specify the date and timing, the VWAP will be anchored from that place. Okay. So this is how you apply VWAP in Go charting. Now let's get back to our slide. So why VWAP? Why we have to use the VWAP and its bands? Okay. So friends, as I have explained to you in the previous lecture, what we used to do, we used to find out the value area with the help of market profile, or we also used to combine the multiple market profiles, that is also called composite market profiles. Now the problem is that is the value of the previous day or previous few days. That is not the value of the current day. Okay. Why? Because the value keeps on forming during the current day as well. Okay. Now, VWAP bands, they help us to monitor the value forming during the day. Okay, so we also need to know what is the current value as compared to the previous values. So now let me show you this in Go charting. So say for example, we have just seen if you apply the market profile. Now this was our composite market profile. Okay. So now if you see this particular day, okay, now let me switch off the market profile. This day and this day we have made this composite profile. So if I can unmerge it for you. So these are the two market profiles. Okay, we have simply merged them, merged to left. So this was our value area. Okay, this line is showing us the value area. Now let me switch off the market profile. Now let us try to run. Okay. Now you see where the value is forming. You just look at the VWAP and where the current day value is forming. See, the value is actually inside this previous day value. Okay. So the value is actually not migrating. Okay. Similarly, you see the next day VWAP. The value is still inside this previous day value. Okay. So what is the value? How do you find the value? So friends, the developing value is basically the first deviation band. Okay. So the first deviation band indicates the developing value of that particular day. Okay. Even for the next day, if you see up to 3:30, the value has not migrated significantly. Now the next day, now you see the next day, the value has gone down. Okay. So the value has gone down. So we should expect, according to auction market theory, this was the value area. If the market has gone below value area, we should expect now that the market should go down. But now let us try to look what the VWAP is saying. See, the VWAP is flat. VWAP is not going down. Okay. Then the value is actually migrating upside. So are you going to take the downside trade? I don't think we should do that. Okay, so the value is migrating upside. Now you see the value is migrating upside and it is again coming back to the previous value. Okay, so this is our migrating value. This is the area of the migrating value. right? And now this is almost overlapping with the previous day value area, right? So you see here, right? Now next day, the market opens again inside the value area. The VWAP is flat as of now. Now you see the value is actually started migrating upside, right? So this was a big candle and the value, you see the slope of the VWAP is also to the upside, right? So this is how you can actually see whether the value is migrating or not. Okay. Now let's go back to our slide and understand in a little more detailed way. So how to use VWAP? So first of all, VWAP slope indicates the trending market. So if you see that VWAP is in slope, it will indicate trending market. And if the VWAP is flat, it is the sign of sideways market. Now, let's try to add VWAP and auction market theory together. Okay, so we have learned the auction market theory. So let's quickly revisit the auction market theory. So what were the rules? So first rule was, if the price is accepting inside value area, then it will travel from value area high to value area low and value area low to value area high. Okay. At the same time, if the price is going outside the value area, it will not enter to the value area, but it will be in the imbalance direction and it will keep on moving in the imbalance direction, right? So this is how we have learned the auction market theory, but that was with respect to previous day value area. Okay, now let's try to see and how these rules are applied in case of developing value area. So let's start from here. You can see this is a flat VWAP, quite flat VWAP. And now you see the value. This is the developing value. And what market is doing? Market is going up, down, even inside this value area. Similarly, if you see this particular day, this is also quite flat VWAP. The value was developing first to the downside. Now what has happened? The value has rejected outside this value area. So what is the value area? This is the value area. Value has rejected, again entered and again got to upside. Now it has come to the POC level. It has again gone up, rejected from there, again came down to value area low, right? So here you have got some trending move. Okay. So with respect to this particular day, okay, I'm talking with respect to this particular day, the market was trending. So if you see, this was the value, market has gone above the value and then it is rejecting this value and it is continuously above this. Okay. So we can see that this is imbalance move with respect to this particular developing value area. But are we going to trust this? No. Why? Because there is a previous day value area over here. Okay. So now we will talk in some time how we are going to understand the developing value area and the previous day value area. What will be our hypothesis? Okay. So we'll talk about this in some time. But let me just tell you here that this was trending market with respect to current day value area. This was the value forming and the market was trending. But the market was actually not trending with respect to previous day value area. And that is why it has, gone up and then again came down. So next day, again, you see the market is trending with respect to this particular day. Okay. It has again now traveled to value area high to value area low. Now you see here, this was the value area developing. The market is trending just above, continuously above this value area, entered into this value area. Now here, for the few minutes, or you can say for a few hours, the market was actually traveling inside value area high and value area low. But now see here, this was the area of confluence. Here, the market is going above. It means this is trending with respect to the previous day value area and also with respect to the current day value area. And now you see the market has continuously kept on trending, trending, trending. Again, the next day as well, trending, it has just not entered to the current day value area, right? So I hope you are understanding this concept. Let's go to the slide again. So now let's talk about combining VWAP with the market profile value area and we get interesting results. So for example, that's what I have just explained to you the example. So this is the previous day value area. Market is opening inside previous day value area. It means that market is accepting the previous value. And now you see the VWAP is flat. So what is going to happen if the market is going upside? Now here you have a confluence. So what is that confluence? This is the value area with respect to VWAP, and this is the value area the previous day. Now what you're going to see, if you see there's a lot of absorption of buyer here, exhaustion of buyer, you are going to take the downside trade. So what will be your first target? First target will be this VWAP. So current day value area low, and then the next target will be the previous day value area low. Okay. So this is how you are going to take the trade. Now, in the second example over here, you see the market is actually opening outside the value area. At the same time, you also see that the VWAP is now in slope. Now, can you compare? So this slope and this slope. So this is actually in slope. So what is your thought process over here? So this is opening outside the value area, means the market is showing signs of imbalance. So what we are going to do, let us come take the retest value area low of the VWAP, current day VWAP, and value area high of the previous day VWAP. It is going to retest. What we are going to look in the order flow, absorption of sellers, exhaustion of sellers, aggression of buyers. We are going to take the trade, right? So this is how you can combine the VWAP, market profile, and order flow. Next example. This is a very interesting example. Now you see, friends, you are making the value area based on the daily profile. Now in market profile, you can also create weekly profiles, monthly profiles, annual profiles, right? So there is a lot of interplay, and you can actually understand it properly if you understand this concept over here. So now suppose this is your weekly value area low, and this is your weekly value area high. Now tell me, if the market is opening here, this is opening actually inside weekly value area. So according to weekly value area auction market theory, what is your hypothesis? Your hypothesis is if the market is going at this level, it may reverse from here, because it's inside the value area, right? But now you have made some daily composite value areas. Now what you are seeing, that the market has opened outside the daily value area, and you can also see that the VWAP is actually in slope, and the market seems to show the signs of trending. Now what you are going to do, it is going to come down. You see the sellers absorption, sellers exhaustion, aggression in the buying side. You are going to take this trade. Definitely you are going to take this trade. But what will be your target? You should definitely get out of, before this target. Why? Because this is weekly value area high. This can give a nice reversal. Okay, so these are the things you have to keep in mind. Okay, you should not, that is why trading the market is not that easy. There are multiple forces acting against or with each other, and you have to understand what are those forces, which are the stronger forces, which are the weaker forces. You have to try to go with the stronger forces. Okay, so if you try to combine all these things like VWAP, market profile, composite market profile, bigger market profiles, what is the bigger picture, what is auction market theory saying, and what is order flow saying, and when you align those things together, you are going to get very, very, very good results. And friends, trust me, no other methods. I have learned lots of methods like smart money concept. I have gone through the open interest analysis. I have gone through price action. There is so many things. I mean, GAN, Elliott wave, everything I have gone through, but I have not found any other method more logical than these methods, and these are working very beautifully if you learn it to apply properly. The problem with this method is that this is very cumbersome, and this takes a lot of time to really understand and practice it. But trust me, if you start practicing it in live market with small position, give yourself lots of time, to make lots of notes, do lots of screen recordings, save, lots of your learning, and then keep on, improving on your learning, then definitely you will succeed. And trust me, no one can teach you all these things. Okay, you should understand the basic things, whatever we have taught you in this series. You should definitely understand these things, and then if you start practicing it on a daily basis, then definitely this is going to make a great impact in your trading career. So with this, we are ending this English series. Thank you, guys.